Investment property balance sheets. Today we're going to talk a little bit about how to increase your revenue and how to decrease your expenses in order to optimize and increase the cash flow and the profitability of your investment property. So when we analyze an investment property, just like any business, you're looking at the balance sheet, the revenues, the incomes, and on the other side, you've got your expenses. You want to always increase your revenues as much as possible, which is the cash coming in, and decrease your expenses, which is the money going out. And in doing that, you're thereby increasing the profitability of your investment. The number one way to increase your revenue is to raise your rents. Okay, go approach your tenants at the beginning of the year if they're in their open lease period, and you can implement the rental rate increase strategy. Consider turning your property into a short-term versus a long-term tenancy. Typically, an Airbnb or a short-term strategy will bring in a lot more revenue, a lot more income than would a long-term tenant who sticks around for a couple of years. The next one, consider adding on things like storage or implementing a charge for parking, coin laundry, various methods like this in order to bring in more revenue. Consider renting out your garage as well is another one to increase additional revenue. Another big one we've got a lot of investors now starting to do with the passing of the new bill, increasing density inside of the rental unit. For example, you're adding a garden suite, which will bring in more revenue. You will consider turning a single family home into a duplex, or you could even convert it now to a triplex or even to a fourplex, and then add a garden suite. So increasing density brings in more revenue. Another thing some of our investors are doing is taking any extra cash they might have in a bank account or any unused equity inside of their properties and lending this out privately. Typically, private lending has its own risks, but they pay in that range of 10 to 14%. So now we're going to talk about the other side of the balance sheet, how to bring your expenses down. So let's start off with insurance. Make sure you get an insurance quote every 1 to 2 years. Insurance prices tend to go up, and if you don't keep an eye on it, if you don't shop around, there may be some savings. Consider adding in efficiencies like low flow toilets, low flow shower heads, adding extra insulation in the attic to help keep the heat inside. Consider changing your windows or adding extra insulation around the windows as well. This will all help increase your efficiencies inside your property. Another one you can employ is to consider self-management versus property management. Another savings. You could even take a hybrid, somewhere in between, where you're partially managing and you're partially outsourcing the property management component. We have some landlords who do that, where they will outsource the finding a tenant component, and then they will manage the property on a monthly basis. And then consider with your mortgage as well, consider interest-only options, which will bring down your payment. Consider increasing your amortization in your mortgage, which will lower your payments, and change to bi-weekly payments instead of monthly mortgage payments.